Good to have you. All right, congratulations on this latest raise. You're using the proceeds to buy more Bitcoin. So a lot of newcomers to the space always ask, is now the right time to buy?
Well, it's always the right time to buy. We have a long-term view on this. I think that this is the decade of Bitcoin. This last decade was the first decade of Bitcoin, and it reached multi-$100 billion by March of 2020. But I think the pandemic catalyzed the next phase of growth and caused it to mature and come to the attention of institutional investors. And so I think the coming decade is the decade when institutions, corporations, governments, and the like begin to adopt Bitcoin as a digital asset.
Michael, why create Microstrategy to hold the BTC? I see this is a new subsidiary of yours.
When we did the bond financing, we agreed that we would pledge the Bitcoin that we purchased as part of the debt proceeds as collateral against the loan. But we had 92,000 other Bitcoin, and there was no reason for us to collateralize the $500 million financing with billions of dollars of additional Bitcoin. So we kept that out of the collateral package. We moved it into its own separate subsidiary because that increases our flexibility over time.
Is there any concern in raising this much debt to buy Bitcoin, which is a very volatile asset?
Well, I think tomorrow I'll run a survey on Twitter, and I'll ask everybody in Twitter over the next 7 years whether they think Bitcoin will go up more or less than 6.15% per year on average for the next 7 years, and then we'll let them decide.
Fair enough. So you're raising the debt to buy Bitcoin. I just wonder, who are these investors buying senior secured notes for 6% annual interest when they can just buy Bitcoin?
Well, they can't buy Bitcoin because they have investment funds, and the charter of the investment fund is to invest in corporate debt. So their choice is to buy corporate debt for Microstrategy that's backed by Bitcoin and also backed by the cash flows of the intellectual property of an enterprise software company and get paid 6.15% interest. Or they could buy corporate debt from another company approximately our size, but only get paid maybe 4% interest, and they would not be collateralized by Bitcoin. Or they could buy the corporate debt of an Apple computer or a bigger company and get paid 2% interest. So they're actually investing in a debt instrument that's collateralized by Bitcoin and cash flows that's got a much larger yield than other choices they might have.
Would you say buying these notes or even buying MicroStrategy stock is an expensive way to gain Bitcoin exposure?
No, I wouldn't say that. I would say that if you have the charter and the ability to buy Bitcoin, you could buy naked Bitcoin and you get all the volatility of Bitcoin. If you have an investment fund and your charter is to invest in publicly traded equities, you can't buy Bitcoin, nor can you buy convertible debt, nor can you buy debt. And so if you were to buy MicroStrategy, you would be buying a company that's a blend of an operating software company with a leveraged Bitcoin position. That would be different than buying an ETF, because an ETF wouldn't have an operating business to sweep cash flows into Bitcoin, and it wouldn't be a leveraged Bitcoin position, and you couldn't do the sort of things we've done, like issue debt for 0% coupon. I mean, you can't do that with an ETF. If you have a convert fund, you could buy convertible bonds, but you couldn't buy equity, and you can't buy Bitcoin, and you can't buy senior debt. And if you have a corporate debt fund, you can't buy converts, you can't buy equity, and you can't buy Bitcoin. So the world consists of different investors. They have different charters. They have different limited partners. There are certain things they can do. If you want Bitcoin exposure, you might choose any of those as a rational decision. It depends upon your strategy and your charter.
Fair enough. Switching on to some of the news items we have today, Paul Tudor Jones saying that he wants 5% of his allocation in his portfolio to be Bitcoin, and that's a response to the Fed's soft language on inflation. Does he have a reason to be concerned, and what are you watching out for at this week's Fed meeting?
6 months ago, there was no inflation in sight, and we speculated that it might get to 2%, and when it did, the Fed would do something. Then they changed the expectation to they would do nothing until it got over 2% for a long period of time. In the last month, I think it's now 5%. And so we found inflation by CPI standards. And so institutions have reason to be concerned about inflation. Between that and the commodity inflation, which is rampant, I think Paul Tudor Jones' message is a good one for Bitcoin. He's saying that he's upping his allocation from 1 or 2% to 5%. That's great. I think it signals that institutional adoption is coming. I think it's only rational to look for a monetary inflation hedge at this point.
Interesting. We also hear from Elon Musk saying that Tesla will resume accepting payments in Bitcoin if Bitcoin mining reaches about 50% in renewable energy. A lot of Bitcoin maximalists just want Elon to go away, but you have his ear. You began the Bitcoin Mining Council with Elon's participation. What is your perspective?
I thought it was awesome news because what he was saying was, first of all, he hasn't sold any additional Bitcoin. He confirmed that they'd only sold the publicly disclosed amount. I thought that was bullish. He also indicated that there are circumstances under which he would continue to accumulate or continue accumulating Bitcoin. I thought that was really a good message. I thought it was a message of support for Bitcoin. And I think if you combine it with the latest China news, the hash rate on the network is down to 138 exahash, and there was a minus 5% difficulty adjustment down last period, and there's a targeted minus 4.9% difficulty adjustment coming. I think the implication is a lot of China hash rate that's running on dirty coal is being turned off and decommissioned. So there's a surge in the energy mix toward renewables just in the past 2 weeks. And I think that once we sort out what that means, we'll conclude that the network is migrating to the US. The network is decentralizing further. The difficulty rate is dropped, and that's great news for every existing Bitcoin miner outside of China. And for anybody that wanted to see Bitcoin become more sustainable and more carbon neutral, we just saw 30 exahash, which is 20% of the network, which presumably was the coal burning 20% of the network in China, come off the grid. And so there's really, really interesting and positive developments here, I think, for everybody in the Bitcoin industry.
Michael, I wonder, what is the status of the Bitcoin Mining Council presently?
We have launched the Bitcoin Mining Council, and anybody can join. It's a voluntary and open forum, and we've got lots of people joining right now. We're going to sponsor a Twitter Spaces meeting on Wednesday night at 8 p.m. Eastern Standard Time, and anybody is invited to come, and then we'll give you a big update on Bitcoin Mining Council.